Sign up to Bityard today, deposit $100 to qualify for the wallet token airdrop. Hello everybody, welcome back. Let's have a look at how bad things are, depending on which way you're playing this or what your expectations are. Me personally, I'm getting quite excited. It's heading towards my area of that 31,350 specifically area where I'm looking for it to get tagged. It looks almost inevitable at the moment, but you know, you just never know. So we're looking at this first of all on the weekly. I wanted to show you a few things. We did have a falling wedge pattern in there, which has been rendered completely obsolete. So we got rid of that, but we can keep these the resistance on there. But effectively what we're really focusing on is moving averages. Now we did get a rejection on the top of the trend line here and again here, which weren't anything to do with moving averages. Support on the 20 weekly, and then from that point forward we're just slicing all the way through these moving averages and flipping them to resistance. So we got resistance on the 10 exponential, resistance on the 50 or the 21 exponential, back again on the 10, back again on the 10. So really moving averages are the main thing, which is obviously why I like to use them, really. But at the end of the day, it's the pressure is continuing down. And on the weekly, we've now got ourselves a short signal similar to the one, well, it's exactly the same as the one that we had a couple of weeks ago on the daily, which was the short signal on the daily, which we were waiting to play out, and obviously that's played out now, played out to a large extent already. But obviously it's going from insult to injury now. We're playing out, well, we do have a confirmed short signal on the weekly, so that offers further downside. Absolutely further downside, and to be honest with you, you know, with larger term time frames, you're looking for larger moves, but you're also looking for you know, a much larger period of time to pass before that plays out. Now it could take place at any minute because it has been confirmed. It could happen immediately, or it could happen in about a month from now. It could. We waited best part of 2 weeks for the short signal on the daily to play out, and it played out. So I would say we'll be looking for this to play out probably within a couple of months, to be honest with you, and that doesn't mean it's going to happen in 2 months. Remember, it can happen any minute, but yeah, it is a weekly signal, so we have to wait for a while. We do have to wait for a while for that to play. So again, sideways, down and boring, I imagine for the most part. There's only one real way to play it, which is either to go into hibernation or to have buy orders. My buy order now is around here, 31,350. I'll show you what I find interesting. If we have a look at this over here, we do have a little bit of historical relevance to it before the summer lows. Now this is one of the reasons I like to front run areas. I'm all up for this hitting 29,000. In fact, the way that things are looking, I think it's almost inevitable. But I'm not going to get too clever on it. I don't really see the point. When you sell high and all you're looking to do is buy low, so a sell high, which is around here just before the Omicron dump, and buying back incrementally. That's the name of the game. So I don't want to miss out on buy orders. Every opportunity for a potential low is an opportunity for a bottom, right? Even though the momentum is clearly down, I don't want to get too clever and put all my eggs in one basket at what I consider to be, you know, a pretty realistic area for at least a significant bounce, or maybe even a bottom, which is between 28, 29, which is previous summer lows from basically a year ago, right? But, you know, with this kind of trend, the way that it looks right now, it doesn't look particularly good. It is clearly down and momentum is building, and we've got short signals across the board. Now, there is one thing that I can show you, because obviously I like to balance everything out, and this is obviously the way you've got to do trading. If everything pointed to one specific direction, it would be easy. It's about working out the odds. We're working out the odds. You know, the odds are in your favour, the odds against you. Now, obviously, the odds are in favour of further downside, but it can't go on forever. It can't go below zero. I mean, obviously, let's not talk about that. It's not going to go down forever. Nothing will. And there's always on these sort of charts, you know, like Bitcoin, Nasdaq, all these other things. The idea is that it goes only up anyway. You know, that is how it's always been. That's probably how it's going to be. And so there is more to be made than to be lost, if that makes sense. So 31,350 is my buy order, which is, yeah, we're very close to it now, potentially coming down to this level. Worst case scenario, we end up bottoming around either the 200 simple or the 200 exponential. 200 simple is just below 22,000. 200 exponential is about 25,000. This is all on the weekly. You know, historically, you know, that has happened. Not on this chart. We'll have a look at Bitstamp's chart in a minute because it's got much more relevance to long-term time frames. But if we go to the 3-day, this is where I'm going to show you a little bit of hopium. Now, money flow index isn't really anything to look at when it comes to finding bottoms. It's usually pretty rubbish. It can give you a ballpark area of a bottom, but most of the time it's not very good. But I did backtest this one here. So this is your money flow index on the 3-day, and it did actually do a decent job of finding the bottoms. It's much better at finding peaks, but it's on this occasion has done quite well at finding bottoms. Now, if you obviously you can see the fact that there's quite a steep drop, so there's been an enormous sell-off, absolutely enormous sell-off, and it's actually come down to the exact low, which was probably about 2 weeks after the major drop back in 2018. More or less finishing Bitcoin off. There was a little bit of dribble down from there, and I'll just show you here. So this is where we were last time we saw a money flow index drop of that significance. It was around about here, and it was around these lows. Let's have a look at that now. Yeah, it was these lows. So we did come down by about another 18-20% or something from there to there. Let's just measure that out. Yeah, give or take 20%. So, you know, what's 20% between friends? You know, it's nothing really. When you think about it, this is what I mean when you're talking about charts, which are generally only up. You know, if you had bought that 4,444 opposed to the absolute low of 3,333, it's interesting, isn't it? That's interesting. I wonder if they're Mason numbers. They probably are. But if you'd bought either of those, you'd be pretty happy, wouldn't you? Even today, you'd be pretty happy. Now, the next time we came down to revisit those lows was here. And it wasn't as low, but it was particularly low. And where was this at the time? It was where we found our double bottom here, around 6,600. So interesting that it did navigate reasonable lows, and that was in the face of pretty bearish sentiment. Obviously, this was a long drawn out bear market. This was quite a long consolidation after it did its first massive rally in 2019. So there is something to hold on to there. Now, that's not any way to trade, I have to tell you, because it's just that is not a way to trade. But if we are looking to navigate potential areas of bottoms, there are reasons to think that we are either there or we're close to it, which is why, like I say, the idea is to not get too clever. And well, for me, I'm talking about myself, right? I'm talking about that. You know, it's my plan the whole time. So my idea is to not try and get too clever. Every time we hit a potential low, it could be the low. But realistically, in momentum terms, it's going from, you know, weakness to weakness to weakness to weakness. It doesn't look good, but neither did it look good in 2018 as we approached these lows. Didn't look good here, did it? Which is basically where we were, around these lows here. About here, wasn't it? It didn't look good then, did it? It looked awful. Didn't look good then. And I remember this specifically because I always refer to this you know, the moments in my Telegram when people were talking about, I'm not going to buy 6,600, I'm going to buy 6,200, and how irrelevant all of that is in the end. So yeah, here we go again, and it's the same old deal. Yeah, we're bearish. Everything looks bearish. We've got short signals playing out already on the daily and yet to play out on the weekly. That would go in quite nicely if we were expecting, you know, historically, if we did reach these significant lows on the money flow index and come down another 20%, where would that take us from here? Another 20% could take us down to, well, it looks like it would take us to about 25, 26, which is just bordering that weekly 200 exponential moving average, isn't it? So if we think about that, this could be a potential area for a massive wick that wipes people off the face of the earth. So we're looking for another 23%. Fair play, it could happen. And like I say, each one of these areas is an opportunity to buy and maybe even catch the low. They might not. We could turn around from here, although there is really nothing to suggest that we will, but we could. There's more to obviously this picture than just Bitcoin. Dixie continuing to rampage. Obviously, inflation is still running high. The Fed's struggling to deal with it. We're waiting to see what the next CPI report is, which I think is some point this month. I can't remember, but I'm pretty sure it's this month. Another rate hike next month as well. So the odds are against anything really going up for a prolonged period of time. There's your Dixie continuing to try to make new highs already this week, and this is your total market cap excluding Bitcoin and Ethereum. We're going to put ourselves a little horizontal in there, which has some significance, but realistically it's most likely going to break down, and I would imagine our next major area is about $100 billion lower than that. So not looking particularly good, let's face it. Bitcoin dominance still hanging around right in the bloody middle. So, this again is no place to trade alts while we're hanging around like this. You can take some gambles on them and feel free to do that. That's your call. But for me personally, this isn't really an altcoin position. If anything, this is a Bitcoin position. The lower we go, the more likely it is to bounce and effectively break out. So whether we're going bullish or bearish, you're better off putting it into Bitcoin, in all fairness. Or just not doing anything, It's completely your call. But if you want to take part in the market, I'd say this isn't an altcoins particular area. Altcoins could easily run, and go hard and heavy when Bitcoin moves, but it wouldn't be anything I would hold on to for a prolonged period of time. It's just an emphasis on the fact that Bitcoin's moving, and due to small order books, because everything's wrecked basically, you'll see altcoins do some decent moves, but they will be short-lived. They're not in any kind of position to continue on with those moves. But it doesn't mean that these lows aren't significant lows, and feel free to take advantage of them if that's what you want, but it's not a situation where I would say alt seasons are ripe. It's basically the opposite of that, really. It's kind of the opposite of that. It looks like, if anything, it's going to be a Bitcoin season, to be honest. And that could be in a bull or a bear trend. So at the moment, things aren't looking good across the board. However, opportunity remains. My order coming in quite soon, I would imagine, 31,500. Looking for that to get tagged, and maybe looking to place a bottom, maybe there, maybe 28,000, maybe 25, 26,000. Who the hell even knows? The idea is try not to get too clever, try not to get too stressed. It's all okay. But the grand picture is that the whole economy is not looking particularly happy. So let me just have a look at the Bitcoin chart. What am I doing? BTC USD on Bitstamp with the large history. Put it on the log scale. This log scale that we've got here, this large trend going back since 2013, basically emphasizes the significance of that area around 20, the upper to mid to upper 20s, right? So if we look at this on the log scale, it's not very neat, obviously, but you can't expect extreme neatness with a chart so long. It's not particularly neat, but we do see that there has been significant lows placed in on this diagonal trend, right? So if that is the case, then we are seriously considering that this month we could be revisiting the 20s, the mid to upper 20s, and that is another realistic area that we could find a bottom at. But the thing is, nobody really knows. All we've got are the tools that we have. We've got short signals on long-term time frames. We have bottoming signals on I suppose long-term time frames as well. So I think there's one thing that I would say about the whole situation right now is that it's not an investor or a trader's particularly it's not an environment that is, it's not a comfortable or easy environment to trade in, and so for the most part I would say the best thing to do is to not trade. For me, I'm loading up my arsenal with more and more Bitcoin as we go down, because effectively they're the weapons that I use to trade alts, and the time will come for me to alternate from that Bitcoin position back into alts and create more Bitcoin out of those alts. But for the moment, it's like I'm replenishing the arsenal, if you think about it like that. I'm reloading with all those Bitcoin bullets, and effectively that's how I'm seeing this environment right now. Call it accumulation, or just dollar cost averaging. The idea is that the bottom will be here at some point soon, and then the market will remain again. It will come round again. And if anyone was around from the beginning of this channel, if we go into something similar to that, which is like another 2 years worth of, you know, I suppose casual but yet highly lucrative trading with altcoins. You know, all of that was based upon plans, right? And this is where plans begin. They start at the drawing board, and you know, if you want to play the game, like this is me talking to myself, I want to play the game. I need Bitcoin to play the game, and I'm going to get more and more and more and more of it the lower it goes. Because it won't take much when the time is right to flip that Bitcoin into doubles, triples, quadruples, you know, 10 timesing it. It's reasonably straightforward, but at this current situation right now, there is only really one thing to do, which is focus on Bitcoin each leg of the way down, pick a bit up, because you just never know when the bottom will be. Look, worst case scenario, we drop out of here and we come all the way down, and we you know, this gets wrecked. It wrecks every single component of all the charts that we've got. We forget about the bull market, we go straight into a bear market, and effectively at that point then I would say, all right, there's not going to be anything coming around the corner soon. We will look for genuine bottoming vibes, as in like the sellers have finished, you know, the bears are full, they can't eat another bite. But for the moment, we are still navigating our way slowly but surely towards what could potentially be a bottom in the mid to high 20s, and see where we go from there. But wait for the CPI report, wait for the next month's rate hike. We need inflation to come round and start looking a little bit more appealing. Otherwise there's not going to be any confidence in these markets, and they are just going to go down by default. Right, I am going to leave it with you there. There's nothing much more to say about all of this, but I wouldn't particularly get stressed out about it. These things happen, it is what it is, and you'll make more money incrementally buying the red candles than you would incrementally buying the green candles. Right, I'll leave it with you there, guys. Have a nice day. Take it easy.